welcome to Ticker Talk. It's been, well, we've had a lot going on since the last time we talked, eh? Well, last time we talked was like right after the Fed meeting and the raising of rates, and well, we've had an election and we've had crypto crash and lots of concerns in the market, and so I guess we got a lot to talk about today. So we're gonna get right into this. So as always, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading investment decisions are your own and done at your own risk. I'm Kevin. I think everybody here knows who I am. I see a lot of familiar faces. So, and if you're watching the recording, go ahead, smash that like button. So we're going to take a look at the market, but I guess first we need to talk about a couple of different elephants in the room. I guess, first of all, maybe talk about the election, right? Because, the market loves a split government. They love, market loves gridlock because there's no policy risk, really. If you can't get anything, the government can't get anything done, then there's no risk to any of the companies of the government coming in and changing some policy that affects their business or affects us as investors, right? So, that's one of the reasons that the market loves a split government. I think there's also sort of the false impression that the Republicans are better for stock markets. And, I don't believe that's true at all. But, most of the stats that I've seen say that that's not true. So, but anyway, I don't want to get political or anything. But it is important that we understand why the market is reacting the way it is to the election. It still looks like the Republicans may take the House with a very slim majority, and it kind of looks like the Democrats will hang on to the Senate. So that should please the market. But I mean, it looks like it's going to take a little while, and it might even take a runoff election, apparently, and I think it was Georgia, before we actually know for sure. So, it may be a little bit before we sort of get the reaction we want in the market. So, not surprising that the market wasn't terribly thrilled today when we got up, that we were down a bit. And I thought kind of, all right, fine. It's, we'll get over it. It does look like we will eventually have this split government that the market wants so badly. And then the whole crypto thing happened, or the crypto thing really started yesterday, right? But it got worse today. And I think that most of the down mood, most of the risk off sentiment in the market today was because of everything that's going on in crypto. I think that whenever something like this happens, there's fear of a liquidity crisis. There's fear that there'll be a domino effect. Somebody's dog is, I think it's Marvin's dog is barking. I'm just going to mute you there, Marvin, for a minute. If you want to talk, go ahead and unmute. What was I going to say? Where was I? Yeah, fear of a domino effect, fear that, it'll take other companies down. So if you haven't heard, FTX is a big crypto exchange. They were starting to have a lot of withdrawals, and maybe partly started by CZ, the founder of Binance. Apparently the two guys, the guy from FTX and the guy from Binance, are rivals, and it looks to me kind of like this is almost set up by Binance in a way, I believe. I don't know. We'll see. But anyway, there was a run on withdrawals. They don't have enough money. There's also been a lot of talk of fraud. So we don't really know what's going on yet. But long story short is, it's really bad for the crypto market. I mean, crypto is dumping. Bitcoin's down, over 20%. Actually, we can take a look. Blah, 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 right. Yeah, we were down. So Bitcoin in the last 2 days down about 22%. Ethereum down even more than that. But in the long run, Ethereum is actually doing better, still above these lows back here. And you can see that Bitcoin is well below those lows. The one that really got hit badly is because apparently the guy from FTX is also a big investor in Solana. And it's been hit quite badly, down about 65% over the last week or so. So that's pretty nasty. So yeah, I mean, this is a crash in crypto, no doubt about it. A lot of people are losing money, but it's not that much money. You know, compared to what happens if for instance, if a stock brokerage went down, or a clearing firm went down, then we would have serious repercussions through the markets. But you know, this is this one exchange. It's, I think, $8 billion there, which is really not that much money. You know, I feel bad for people getting hurt by this. I'm getting hurt by this. You know, I mean, I own crypto, and yeah, I'm taking a big hit. But I think the fear that it's going to expand through the stock market is unfounded. And I think that we will see, so that, you know, the kind of trade we saw, the liquidation that we saw in a lot of things today, and it was basically a sell everything day, right? You know, they sold all of the equities, they sold every single sector except, you know, the only subsector that I watched that was up is TAN, the solars, and it's not up that much. You know, the defensive, all the defensive sectors outperformed everything else. And, you know, the best performer today, even though it was down, the best performer down 0.78% today was utilities, but it strongly outperformed everything else. And you can see that the strongest stocks and the strongest sectors today were those defensive sectors. So very risk off. But, you know, I think we're going to see that unwind. The only caveat here being that, you know, we've got CPI tomorrow morning before the market opens. So, you know, if that comes in hot, you know, if the market finds a reason not to like that, then we could be in trouble. But I think if we can get even just a half decent CPI print, I think this market could really rally. I think people are going to come back into it. So I'm not super concerned yet, but you know, there are some areas that are quite weak, and we'll take a look at that. Well, pretty much right away. So let's take a look at our markets. Whoops, not our triggers yet. We'll get to that. We're going to look at the major indices, and you know, some of the indices that we look at. We'll look at a few key sectors. I want to go through this part fairly quickly, and then get into your tickers. So let's start with our major indices, and we'll look at not this one. We'll look at this one in a few minutes, but let's start with the SPY, of course. Okay, now this chart is just starting to get really messy here. Let's clean some of this up. Let's see. Well, this uptrend line is broken. We were looking at this uptrend line last week. That has completely failed. We'll get rid of that one. We don't need this head and shoulders over here anymore. We all know that was a head and shoulders. Let's clean that up a little bit. Sorry, I guess I should have done this before we started here, but all right. Yeah, we all know that head and shoulders resolved right to its target. Okay, we want to leave this head and shoulders in here because it's important still. You know, it's still kind of in play. You can see where the neckline is, and we bounced right off that neckline on the pullback. That happens often with the head and shoulders. And, you know, you start to bounce up. However, today we kind of failed. That bounce was fairly tepid and then failed today. All right, so I'm going to leave this Fibonacci in here as well, because you can see what I want. So this Fibonacci retracement right here, which is all these colored numbers on the side with these colored lines, that was from the CPI low. So that was the last time we had CPIs, when we got that low and that really strong reversal that sent us in a really nice rally to this high, you know, last week. So you can see that we pulled back from that high and we retraced 50% of this move. That's pretty normal. We often retrace about 50% of a move, and we started to bounce. And then we couldn't quite get back up to resistance again. So, we have started to roll over here. We've put in a lower high. It's not what we want to see, right? We want to see this go up and put in a higher high after putting in a higher low. It's not over for this yet. Certainly, I don't think anybody's really calling for lower lows, at least not in the SPY yet. And you can see today we pulled back, but it wasn't ideal. But we're not in a lot of danger yet. We still got a fair bit of support down in this area if we continue down tomorrow on a bad CPI print. And then we've got the 618 retracement down here in around 365-ish, where we also have some, support from the chart. So there is a fair bit of support down below if we need it. But let's see what that CPI print brings. It's kind of all up to that right now. Combine that with maybe some decent news from the election, and we could go right back into a rally again. Let's see. We'll take a really quick look at the Dow. You can see that the Dow. I remember I talked on I guess it would have been last week and on the weekend about this downtrend line, and you can see that after tagging it and pulling back, it went back up. It tried to break through. It's pulled back down again. That's not ideal, right? The NASDAQ, of course, is looking quite weak. As it has been for quite a while. It didn't move up very much at all, on this 3-day rally, pulled back fairly hard, lost quite a bit of it today. And, the support below is not looking as nice as it is in the SPY. IWM, the Russell 2000 small caps, these were very weak today, in keeping with a sort of the risk off theme. This was the weakest index, and the smaller you go down the cap scale, for instance, IWC, the micro caps, was even weaker than this. So definitely everything was pointing to risk off today, and you can see that we had this nice trend line, and that broke through there today. So there is room below this. Our next real support is in this sort of 169 area. There might be a little bit of support just up and around here, or I've got the little red line and around 173. But yeah, if we get a bad CPI print, I would not be surprised to see this come down to 169, if not further. Okay, let's take a look at the volatility index. So with everything that's been going on, volatility is fairly muted. We've had the last 2 days we've gone up, but we haven't gone up that much. I mean, we've come off this low here at what, 24, and what are we at today? 26. We've only come up 2 VIX points. With all the volatility we've had, and as much as the market is down today, yeah, that's very reasonable. So that's kind of not scary at all. Let's look at the 10-year yield. The 10-year yield today is not, look at this, barely moved, nice and tight, still in this sort of tight range, and almost looking like it's ready to roll over, which would be awesome. But that's not saying there's a whole pile of fear either, right? That's not saying the market is about to completely fall apart. So, another little bit of a hint or a clue that we could be going up, not down like everybody expects. And let's take a look at the dollar index. You can see the dollar did go up a little bit. It found, we talked about this pivot on the weekend, and after we tagged that former uptrend line, or the bottom of that former uptrend line, we pulled back just like we should, right? This is TA in action right here, and then we've found support kind of right where we should. So no surprise that we see a green day out of this today, but we don't want to see more green days. One green day is fine. And let's roll over from here, because when this dollar index is coming down, the stock market's going up, and the rest of the world is breathing a little easier as well. Okay, where to next? Oh yeah, let's go to gold. So gold's, got a little bit of a rally going. I remember on the weekend we talked, or last week we talked about, consolidating perhaps here. Well, it only consolidated for a day, and then it broke out above that 1680 level, important 1680 level, with a lot of strength, and now consolidating again. Is this going to make a bull flag in here? That's possible. It's very early yet, but maybe we might see something like that. If we did see something like that, that could be a viable consolidation there for when it breaks out. However, we can see this has tagged the 100-day moving average and stalled out. A lot of stuff has been failing when it's tagging 100-day moving average. So be interesting to see what happens next. Silver's kind of done much the same thing as gold, I believe. Yeah, looks very similar to what's been going on in gold and copper, which is a more important metal to me anyway, because it's an industrial metal. This is kind of made a messy bull flag. We've been just looking like we're getting the consolidation in this area that I wanted to see, right? Underneath this resistance, I like this. And, I'm looking for a copper play. I think that, we've had, as there have been reopening rumors and everything, and rumors of, in China, rumors of them backing off on the zero COVID thing. And we've rallied in a lot of these commodities, I think, because of that. And if it really happens, if they really come out and say, if the government actually says, rather than all these rumors, but the government actually says, and through their actions as well, say, okay, no more zero COVID, we're just going to let it, kind of run its course like the rest of the world has. I think that we will see these commodities like copper, steel, oil, rally like crazy, and the equity markets as well. I think that. I think it'll be really good for a lot of markets. But copper is definitely one place I want to be if China is looking like it's going to be reopening. I won't play the futures themselves. I might play it with a company like Freeport-McMoRan, or I might play it with an ETF like COPX. And we'll look at these a little closer on the weekend. Let's look at our general commodities ETF, and we can see that that's pulled back over the last few days, mainly because of oil. But we've now, tagged this trend line, and we would expect, and there's a 21-day moving average there, and, we've got the 50-day just below that. We would expect this to bounce here. But this has got a fair bit of momentum to the downside, and we shouldn't be too surprised if this cuts through, maybe tries to find some support either at the 50-day moving average or at this, the top of this gap here. Okay, and let's look at oil. So this has had, shown a little bit of weakness after the last couple of days after tagging that 100-day moving average. The head and shoulders bottom that we've been watching is really, nothing has really panned out of that yet. Now we've come down a couple of days. We found some support where we might expect to find it. So it'd be really nice to see this turn up, because just a little move in oil doesn't look that bad. But when you start looking at some of the commodity ETFs, then things do start looking bad. First, we'll look at natural gas really quick. Super volatile lately. Look at these moves, right? Look at these great big, this one here, this giant gap up, move up, and then come back down, and then a big red day, another big red day. A lot of volatility in natural gas. XLE, the energy sector ETF. You can see we came up, we've tagged that all-time high. Spent a few days up in that area, and today said, pulled right back down into this former gap. Hopefully we can find some support here. It should, right? We've got a 21-day moving average here. You look at this series of lows. We've got 3 good lows and a couple of highs right there. In fact, I like that level so much right now. I am going to draw that in. There we go. All right. Watch out for this 87.95. I guess we'll call that 88 level. We should be able to find support there in XLE. Okay, let's look at XOP. That didn't even get to its all-time highs. Not really surprising. It's been underperforming XLE a little bit. but it couldn't even fill this gap, and big ugly red day today. And this one was down. What were we down? 6.5%. That's a big move down, but you can see we're coming into some support. Let's take a look at OIH, the Oil Services ETF, and look at the same thing as XLE, right? Come up, tag that all-time high. It only spent 2 days up there. I think XLE spent 3 or 4 days, and then kind of a big down day, but a down day into a support area. So you've got this little support level here off of this consolidation, and then you've got also the bottom of the consolidation should provide support if it goes down any further. So things are not looking deadly yet, but I know I have been reminding you guys that this is a crowded trade. And when it starts to pull back, it can move really fast. So we do not want to see increasing momentum on this, because if we do, we could end up with something like happened back here in June. And we certainly don't want that if we're in that trade. And we certainly actually don't want to stay in that trade. If it looks like this sort of thing is going to happen. So you got to draw your own line in the sand here. If you're in these any of these ETFs, or if you're in some of the individual names. Let's see. Oh yeah, I mentioned TAN earlier as being the only green subsector that I follow, but you can see that wasn't looking great, right? You've kind of got that shooting star thing. It's a little bearish, that candle right there. Let's look at consumer discretionary. This sector has gotten really unhealthy. Look at this now. Today we broke through. This is the only sector to actually break through its June low. Hang on, I might have misspoken there. It has broken. It's now broken down through its June low. We had this double bottom with the October low, and now we're breaking down through that. That's not good. It'd be really nice to see this recover. Take this back immediately, because if we don't, it could go a lot lower. We're back into levels from, well, we're still in our post-COVID area. There's been a fair bit of price action up in here, nice consolidations and whatnot. So it should be able to find some support in this area. All right, let's take a look at industrials. This is still doing all right. It's kind of hanging in, right? It's, one of the stronger sectors right now. And hasn't even pulled back as far as its this nice uptrend line. But this is pretty steep. So, we've got to be careful with this one. Financials, I guess we'll look at a tech. Tech just looks like, the NASDAQ, obviously. Still off, these lows, still above some important levels. So that's good. But got to turn, right? I don't want to look at communications. I don't want to look at any of the FANGs. If you guys want to look at any of the FANG stocks, just let me know. And, when we get into the ticker talk section, and we'll look at them then. Actually, there is one, though, that I do want to look at, and that is Tesla. I know a lot of people follow this. People laughed at me when I said that, next stop for this is probably going to be 186. And look where, when we broke down through the 206, came down, tagged that 186 and bounced and then failed today. And we're coming into a gap that goes way back to this gap, I think, was in the COVID recovery. Yeah, this is November of 2020 is where this gap is from. It looks like this is going to continue down. Our next support would be about 167. I don't know. This is not good. This is not healthy for Tesla. And these support levels they're minor. I don't consider these strong at all. So next one that I really think has got a chance is going to be 150. I can't believe we were just, we were over 200 2-3 days ago, and now we're talking about 150. That's a little scary. So we'll see, though. Elon, the reason it's been going down so much in the last few days is Elon was selling another $4 billion worth of stock presumably to pay for Twitter or to shore up, Twitter's bank accounts. But he says he's done for now. I mean, he said he's done the last 2 or 3 times this year that he's sold, right? So we can't believe him on that. But he has a few days to file, and when he files, he has been done in the past for a while. So I don't think this is him selling today. I think this is other people getting out because he was selling, and it became clear today because he filed that he was selling. All right. I think, I guess healthcare is a sector that's been doing all right. Came up into some resistance and pulled back a little bit, but it's still kind of, within a consolidation range up there under that resistance. So I still like this sector. It is definitely one of the stronger sectors. It's got a healthier looking chart than most of the stuff we look at. So I'm still looking for plays there. And the rest of the stuff is defenses. And, like I said, they outperformed, but there's nothing exciting to see in those. I think that's it. So some tickers were sent my way. So I'll just get through those, and then we'll get into your guys' tickers. Thank you for waiting patiently, all you guys who are online with us today. So a couple of these tickers are in the semiconductor sector. So we'll look at SMH first really quickly. And we can see that, this is still chugging along, or grinding its way to the upside. Let's start marketing in this channel here, because this is a fairly decent looking channel. And as long as we're in that channel, I think we can be pretty happy about what's going on in semis finally. Yeah, so we have closed this gap now. So I'm going to delete that gap out of there. And we pulled back today. Where were we down? 2.72%, about what the Qs were down. Maybe just a tiny bit more. So that's not bad, considering that semis have been one of the weaker areas. No reason to think that this won't continue its move up. We've got some good support here. We tried to fail out of the channel and moved right back into it. Yeah, I like this price action here. So, maybe it is time to look at some of the semis. I know we look at AMD as well a fair bit, and you can see that it's hanging in as well. It's still got this base on base. It tried to break out of there yesterday and put in this indecisive doji, and then gap down today, which is no surprise, and pulled back, but still staying in range. So AMD probably needs just a couple more days to consolidate again and then make another try at this, right? Or if we get a good CPI number tomorrow, it could just gap right up and get going. Okay, so this one is for NS, GFS, Global Foundries. So it's in the semiconductor sector. This has got a pretty strong chart compared to, the sector itself. It may not be the best looking one in the sector, but it's not bad. Okay, these guys haven't been around that long, eh? So obviously we're going to have some resistance up here in around 64 to 65. Let's get that mark in. Come from over there though. Ah, come on. Yeah, that could be a level as we get back up there. Yeah, some stuff going on around here. On here, and a little bit messy there. Oh yeah, look at that, actually from that gap right there. Right after the IPO. Cool. Okay. And I think that let's get an uptrend line on this. It did really well after this is beginning of July. Okay, so it bottomed late, and actually semiconductors I think bottomed late after that June low. But it's done fairly well since then. I mean, we had a really nice rally and it's pulled back. It's starting to move up. What we don't have yet is a higher high. I mean, we want to see a breakout above here, above this 65 area, to confirm a higher high, to confirm this uptrend. But, we do have definitely a series of higher lows. And now, in the shorter term, right, we've got a low, we've got a high, we've got a higher low, and now we've got a higher high here. So that's good. And a nice green day today. Well, actually not quite green. It was down 0.2%. But after gapping down, this climbed up. So that's good. I think it had earnings. I guess it had earnings yesterday, last night probably. Or actually, did it have earnings in the morning? Here, let's take a look at an intraday chart, and that will tell me what I need to know. Oh, right, I can't go back far enough. Okay, anyway. Yeah, it looks like it had earnings yesterday morning before the open. Because that gapped up a lot, right? So obviously earnings must have been good. Yeah, 60 cents. It was 48 last time, 32. So yeah, there's growth going on in this company too. Look at this. Every earnings better than the last. So that looks good. Okay. So no reason to believe this can't go higher. It had a nice recovery after a gap down today, and in a really ugly day too. How does yeah, right from the start. Okay, so that after gapping down, it went up and then it held through the day when the rest of the market was falling apart, right? Because if you look at SPY was just grinding down all day, okay? And GFS went up and then went sideways. Okay, so relative strength right there. A little bit of strength in the market, and I think that this could definitely be an outperformer. There may even be day trades or swing trades in this one. Yeah, and it's a good find on this one. I like this. I think kind of watch some of these levels if you're looking to get in. Let's get some more levels here, like right there. If you're looking to get in a break above, these highs right here, that could be an entry point. Even just a break above today's high, could be an entry point. But just, watch out when you come up into this, 64.75 to 65 area. Could be some resistance right there. But hopefully, if you break out through here, you've got enough momentum to carry through there, because if you can carry through above this 65, it should be an easy run up to the 72, 73 area. So yeah, nice find. All right, let's look at MCHP. This is microchip technology. Don't like the chart of this one as much. It seems like, the dominant trend on this obviously is down. Still, okay, we've even though we've got this downtrend, and the trend is slowing. Like, I mean, before, right, you would have drawn the trend, you would have drawn the trend something like this, right? Well, that steeper downtrend is now broken. Here, let me tweak that up. That's not quite right. There we go. Okay. So yeah, the downtrend is slowing. We've got a double bottom in here, so that's good to see, and we're coming up off that double bottom. In the short term, high, higher low, higher high. It looks almost ready to roll over a bit. You can imagine the channel, much like the channel we saw in the semiconductor ETF, kind of something like that. And whoops. Duplicate that guy. We're gonna get a hotkey for that duplicate. I do that a lot. Okay. Looks something like that, right? So as long as we're in this channel, I think we're fine. But it does look like it's rolling over from the top of the channel, going to come down to the bottom of the channel. That can, if you like this, If you like this stock, if you like the fundamentals, that move down to the bottom of the channel could be a good place to buy. And I'm also kind of seeing that there should be some support in there. You know, we've had some support in the past back here. Let's get that line in. Something like this, just drawing that in really rough here. But you can see how that acted as support, kind of acted as resistance over here, support again. And that sort of corresponds with if price is rolling over right now, where price might be in 2 or 3 days, right there, catch that and bounce up. So it's not bad. I like the other one, GFS. I like that one a lot better than this, but you know, this could move too. Okay, let's look at one more here that was asked for is Costco. You know, Costco being a little bit of a disappointment. You know, I mean, this had such a beautiful run, you know, from really from, you know, I mean, you know, 2019, COVID was almost nothing to it, right? You know, can you find COVID in here? Oops, no, COVID is over here, there. Nothing, right? But whatever's going on now is much more serious for this stock than COVID was, which is kind of interesting. I haven't been paying much attention because I haven't been in it for a long time. I got out, I mean, I sold the last of my calls up in here somewhere, I think it was. So, okay, you know, in the very long term, we still the uptrend is still intact, right? And we are bouncing off that uptrend nicely still, but it's starting to be a little threatened because, you know, we've got an intermediate term downtrend as well. So which is, you know, obviously the uptrend is the dominant trend right now, but is this downtrend going to take over? And you can see recently this downtrend kind of accelerated a bit. So, you know, we're really, let me get rid of this one. Get rid of that, and this gap is filled. There we go. So we're really kind of in no man's land right now. You know, we're tightening up, consolidating between trends, and which way is it going to break out? And if it breaks to the upside, does it reestablish itself on this trend line? So to me, you know, I don't know, as much as I'd like to be in this, I kind of don't trust it. I don't know how to get in that. You know, maybe if it comes down to the uptrend line again. But, you know, I don't know. It just seems to me this needs more time to go sideways, or it needs better market conditions. But, you know, Costco should be one of these stocks that does well, you know, whether we're in a recession or not, right? Yeah, I'm on the fence on that one. Okay. That's everything I had to go over. So it's your guys' turn. I think everybody here knows what to do. You know, if there's something you want to look at, like Marvin just did, WBA, throw it in the chat. You know, let me know, you know, why you're looking at it. If you're looking at, you know, if you're in it already, if you're looking to add, if, you know, whatever you got going on, and you can, if you want, you can unmute and we can chat. You can tell me about it. So we'll
start. Kevin.
Hey, Justin.
Sorry, I don't know if anyone is going before me, but or posted something in the chat. I don't know. You could go with them first if you like.
You're here. You're talking now. I'm not
okay.
And then we'll move over and get to the ones in the chat.
Okay, my question is for Canadian Solar.
Okay. See, it's CSIQ.
Yeah, CSIQ. So my question is, like, you know, I thought that it was like kind of a decent. I mean, you tell me if it was like a decent sort of like setup. Like, it's a kind of a company I've been watching for a while.
Okay.
And I saw there was like a little consolidation going on the last couple of days.
Yeah.
And then I tried getting it today.
Okay.
So I guess my question is not only specifically for CSIQ, but it's also kind of like how to get in on a breakout, or like when to buy in the morning. Because with this morning, it's just like I wasn't sure when to buy, but this is one of the stocks that I kind of bought within like the first 10 minutes.
Okay.
You know? And then you see it starts to go up, and then it like crashed pretty hard down. You know, like it whipped down pretty heavily.
Yeah.
When you see a stock wick down like that, I feel that's pretty bearish, correct?
Yes.
And so that's why, like, I ended up selling right away, but pretty much where I bought it. Yeah, but so you know, I had cold feet, I guess, and I guess like that's what I kind of was asking. I wanted to ask you about, like, you know, what's a good practices of entering a position, I guess.
Okay.
And you know, did I overreact when I saw that huge wick?
Yeah, I think that going in today might have been a bit of a mistake.
Okay.
I think that today was not the day to be going, you know, to be starting positions. So let's just draw a couple more things onto this chart, because I do like this consolidation you found, right? I mean, you know, good call on that. Whoops, that's not after. It is a nice consolidation. It's a totally playable consolidation. I think that you might have just sort of jumped the gun going in it by going in first thing this morning, or within the first 10 minutes this morning. Because you know, one of the things I'm always doing when I'm looking to start a position or looking at something, you know, that's maybe going to break out like that, I'm looking at what is the market doing. And so we want to go to our intraday chart, and you can see, okay, so right from the start, you know, the market goes down. So basically what we had was, you know, we had our decent day yesterday, right? Or, you know, or good enough day yesterday. But then today, all through the pre-market, the market's coming down. It felt like there was disappointment out there. I mean, you know, with the elections and stuff that I talked about earlier, you know, with the market. So we knew that the market wanted to see a decent Republican win, and we weren't getting that. We were getting it's what we were getting is they're probably going to take over either the House or the Senate, but probably not both. It's still all very up in the air, and the market was just kind of feeling, you know, and to me anyway, the market just looked kind of meh, and it looked like it was going to be a meh kind of day until something really happened, right? Now, so, I mean, in the SPY, you can kind of see just choppy, right? And here you start going up, and that might be where you went in that stock. You know, because this started to look real. But then when we got into, you know, an area where we had consolidated in the pre-market, and then our later sort of pre-market high, well, it just started to roll over, and then it went down the rest of the day. So that's our sort of market context, right? So we kind of want to be, if we're going to be starting a position in something, if we're going to be playing a breakout, we want to be aware of the overall general market context. You know, and if we look at some of the other stuff like the Qs were definitely weaker than the SPY, and you can see that here, and just choppy, messy, right? It's not that none of this is sort of saying to you, hey, this is a market that's going to start trending, right? So you want to be careful about getting into a stock that you want to trend, right? That you want to break out and run. Okay, so let's move on back to CSIQ. Okay, the cool thing is another, you know, kudos on finding the one sector that actually worked today.
Thank you.
And going in it early, because that's really cool. And I can see why you wanted to go in this now. You know, because we're looking at a 2-minute chart here, but right from the start, this was looking strong, right? So where was Where's our level? I'm gonna go back to the daily here. And so what's our breakout level? I mean, if you're looking at the candle from the day before, so the high the day before was 35.18, and then these two high here, 35.32. All right, let's move that over to, so 35.18. I'm just going to draw that in as, I'll just put that in as an R1. 35.18. Yeah, right, of course, it's coming off of this right here. And that was the other one I said, I think it was 35.32, right? We'll call that R2. Okay. Yeah, so right from the start, you can see that. I mean, this is going nicely, and you get your first breakout right here. You get your breakout above the high from the day before, and then you get your breakout from those other two highs. So once you're up in here, then you are, officially breaking out. But we're only. Yeah, here we're only 6 minutes into the day, right? We're in the first 6 minutes of the day. And you see this a lot, right? In the first, 10, 15 minutes, you see big moves like this, and then you almost always get a pullback. Now, this behaved really nicely on the pullback. It pulled back, it came right back to the breakout level, and then it started going up again. And I would suggest, actually, that the place to enter would have been after this bounce. So maybe somewhere up in here, in around 35.72, because really it proved it to you by then, right? However, by this time, what the market is also kind of going, okay, maybe it's going to rally. So, looking at this, looking at the hard right edge like this, it's like, yeah, why wouldn't you get in there? Because if you don't, you're really kind of gonna, it's really threatening to miss the move, right?
Yeah.
It's gone up, it pulled back, it's starting to go up again. It's a little bit choppy, but it's going. And here we go. So yeah, you better be in it, right? And you go up and you go up and you go up, and then you start pulling back down, tries to hold VWAP, and then it fails at VWAP. So now you got to start wondering what's going on. Now, I don't know if that's where you got out, but then you can look at how tight. So look at all this price action we had so far, right? Pretty loosey-goosey, right? All over the place, kind of volatile, all right? And then we get this. Look how tight this gets. If I had seen this, and was inclined to trade this thing, to day trade it or scalp or whatever, I would have put a sell stop order, down below there, and a buy stop order up above here, to be in it whichever way it went. And I would have got faked in it right there, and I wouldn't have been happy about that. But you can see then, look what happens, right? So tight consolidation, and when it starts to go, it really starts to go. And so if you're not getting out here, you've got to be getting out here, right? Because by this point in time, so what is this? Near 130. Okay, so what was the SPY doing at 130? I bet you that's right about here. Yeah, the SPY was breaking down too. The SPY had been going down, since for about 3 hours. The SPY had already been going down, and then it really started to accelerate to the downside. By 130. All right, so where are we? Yeah, we're here. Okay. So this is kind of like, this is most of or a good chunk of that wick is up in here and here. This is kind of where you're kind of going to go, oh man, I don't think this is going to work. This market is not behaving today. This is probably not the only solar stock doing this. What was TAN doing at this time of day? How was that looking? Like the whole sector, right? And it wasn't looking So you see the difference. I mean, well, TAN had that really nice run right at the beginning, but when it pulled back, it couldn't go higher, right? Look at TAN putting in a series of lower highs when your stock was actually putting in. So your stock was showing relative strength to TAN because your stock was putting in higher highs. But there were definitely clues here that this was in trouble. Do you see all that stuff now? How it all kind of adds up to?
Yeah, no, I do. Definitely. I mean, a lot of it was like emotional driven, kind of like.
Right.
I actually sold right before it consolidated, like before 1:30. I actually like right there. Actually, I think it was like 12 o'clock.
When it broke you up.
What's that?
When it broke you
Yeah,
up.
yeah. No, actually, right below it.
Yeah.
Right below it.
Yeah.
That's when I got scared, and then so I think I was up 0.5% or something from when I entered, or something really, really small.
Okay.
But yeah, you're right though. I do see that run up in the beginning and then a consolidation usually a lot. So would you recommend like waiting for a because I think like in like the first 30 minutes of the day, that's what's all emotional, and you see it running up and you're like, holy shit, I want to kind of get in this kind of,
It's and yeah, that's really hard, and that's why it's I mean, I don't know how many bad trades I've started by getting in on this, right?
Yeah, okay.
By looking at it, but by seeing the setup and going, oh, here it goes, I got to get in, and you were lucky in that it pulled back and it kept going a bit. Sometimes they do this and they come right back down, and you're way down here 20 minutes later. So that's why I've tried really hard to discipline myself to wait for something like this. Wait for this pullback and then see how it reacts to that pullback and get in here. So, what is that? 35.78, say. Not as good as, getting in on one of these breakouts, 35.26, but it's only 50 cents. It's not that much.
Right. It's true. Yeah.
Confirmation. And I think that has saved me a lot of money in the long run. Sure, I have missed, some trades that have run really nicely, and that's frustrating, but it's also kept me out of a lot that have just completely fallen apart. So, yeah, so looking intraday, I don't blame you for going in. I mean, it was just kind of bad luck. But there were kind of hints that maybe this wasn't the day to be taking breakouts.
Yeah.
Back a year ago, 2 years ago, you could take this, you could be messier, sloppier by taking this kind of trade on a day like today. But because the win rate on breakouts has become so much lower this year than historically, you've got to be a lot more what's the word, discerning, maybe,
more mindful,
more critical about them, right? And have a lot more stuff kind of lining up. Like the market's got to line up, the sector's got to line up if you really want to get in. So you got out here, that's great. You got out below VU up. Would you have gone back in if this had broken out here to the upside? Would you have gone back in?
Yeah, probably.
Small, and then maybe take it start it like a day trade, right? Because you could do that out of this consolidation. Had it broke to the upside, you go back in, you put a stop just below that consolidation. So now your stop is going to be, so if you went in here on a breakout, 35.83, your stop could be down here, 35.65. So, less than 20 cents, right? Because that'd be another way to, I don't want to say salvage the trade, but it would have been a good way. I mean, because nobody would have blamed you for getting out here. And nobody would blame you, certainly. I mean, you should. The right thing to do is to get back in here if it breaks to the upside. And maybe tomorrow this gives you another try. We've still got these lines on the chart. We've got this consolidation here to work off of, and this is just below that 35.32. right, that we'd gotten off the daily chart. So in a way, it's kind of still set up. You could try this again tomorrow. And if anything, your stop is probably even tighter tomorrow, because now your stop is, look at these, you know, look at this right here, right? This, I'm gonna call this a major intraday support. And look at that, it's like, you know, pennies under 35 even, right? So, you know, you go ahead and play the breakout. Maybe you play the breakout above 35.32 or above, you know, this high or that high, right? And you put a stop just under 35. And I think that's a, you know, just go a few pennies under. I think that is a good way to try it again.
Sweet, thanks, Kevin. Yeah, and I'll definitely, if I do that, I'll definitely be more mindful of the market conditions and things like that in the news. Because I honestly wasn't, you know, I was doing this while I was working, so I wasn't really paying attention to any of those other factors. I think it was a big deal too. Yeah.
Right. And yeah, and that is the hard part, you know, when people are working and stuff, you can only look at it for a few minutes. You can't sort of do this analysis and make these decisions, or it's harder, right? And yeah, I mean, maybe I should try and get into the briefing as sort of like, because, you know, when I was writing the briefing, it's like, I don't really think this is the day to really do much of anything. And I spent the day scalping. I was scalping like crazy today. And I was making small trades. I was making trades for, you know, $20, $30, $50, right? In and out, and that was fine. But I had like 44 executions today. It was nuts. That's a lot of trading for me. I don't usually trade that. It was fun. It was cool. So yeah, and when you get more experience, you'll just sort of know going into a day, is it a day I want to be trying to play a breakout, trying to catch a trend, or is it a day I just want to scalp, get in and out? I'm in something for a few minutes, I'm out. I don't give anything a second chance. I don't give it 2 seconds too long, right?
Right.
It's a nice move, no big deal. So it just takes experience. You'll get it.
Sweet. Well, very helpful. Thank you, Kevin. Appreciate it. And, you know, maybe I'll give it a shot tomorrow.
Yeah, you're welcome. All right. So Marvin has asked for WBA.
Yeah, hey Kevin, I'm just, you know, I saw it like fill the gap today, so I'm just swinging some shares. Still thinking like that 42 is like possible. I mean, because I feel like when they had that news, I guess it was Sunday night, Monday, around the 40, because it got close. I think like, or at least the trend line I had, seemingly like Monday it broke above what seemingly, I guess the way I drew it, seemingly it's like trying to break out of that downward channel, but you know, but it has been placing these higher highs and and higher lows in terms of recent action. So just kind of wanting to get your wisdom.
So these guys had, their earnings were a while ago.
Yeah. Mm-hmm.
Okay.
They bought the big news. It was Sunday, and it was interesting because I was actually on my phone and I just saw like breaking news from the Wall Street Journal, and I was like, well, what was breaking news? And it was Walgreens buying they were buying Village MD, or they supposedly will be buying Village MD.
Right. Okay.
Breaking into that, and that's what really made that jump on Monday.
Okay. Yeah, so it gapped up on that, and it's pulled back the last 2 days. It pulled back a lot today. No big surprise.
Right.
Underperformed the market a little bit, but it's pulled back right to support. Decent support here at 37, and that's where we are right now. So does it hold tomorrow? And I think the answer to that is, what is CPI tomorrow? I mean, this is the answer to a lot of. It's going to be the answer to a lot of the questions today. A lot of these stocks we're looking at is, is it going to turn around and go up tomorrow? And that's all dependent on CPI. I don't care what stock it is. I don't care what they do. And same goes for this one. But you really need this to bounce here. We're right on a trend line. We're going to let that cut through a little bit because I think it fits better. If it's better there, if it's better there, if it's better where we are now. So we got support, we got a trend line. It should bounce, right?
Yeah.
This downtrend line here, I'm kind of like, I don't like that trend line, right? I like the other trend line.
Yeah, and that's the first one I had too, like the one that you had drawn. And then I was like, I did the same thing you did, and I was like, but I still like the other one.
The other one's got so many more touches, right?
Right.
So much more important. The first one I drew, I mean, it's only 2 points.
Right.
So it's not that important. And I think that most technicians have been doing this a while, are going to draw like this, and they're going to leave that trend line on there because it's had a lot of price interaction. I mean, it even had a little pullback to it, right? Yeah, we're going to leave that there, and so I guess long story short is, I mean, this thing has got to bounce here, and it's got to bounce here tomorrow.
Yeah.
Or, I mean, I guess it could go sideways. It could go sideways. As long as it's going sideways above the support line, that's cool. Because then you could argue, it's got a little base.
Right.
You've definitely got basing action there. And then if it went sideways up here, then you'd have the base on base thing, which is cool. It's a good way for a stock to take a rest, because then when you break out of that base, you usually get a strong move.
Yeah.
So that's where we're at now. But right now, there's no setup here.
Yeah, I got in right around like that capitulation area, right after earnings. And that's where I've just been like sitting like, okay, it feels like it wants to keep moving, but I got in like
like there.
Yeah, between there or like maybe like a couple days. Yeah, somewhere around there.
Okay. Yeah, I mean, that's good because, okay, so you had a big move up on earnings, you pulled back for a couple of days, and you start to go again. And so getting in there, that's a smart move. And even if it was up here, right? After this, because there's a little bit of a consolidation here, things are tightening up, and then it starts to go. Great, good entry. This is a good disciplined entry. You didn't chase it right on the earnings day. You waited for it to pull back a little bit. I like it. So now, I mean, you've got room to play with here.
Yeah.
You just want to be careful if it starts to break down. You've got some levels. You've got, kind of the low of that consolidation. You've got this pivot here.
Right.
I really wouldn't want to see it go below that. And still be hanging on, right?
Right. Yeah. No, it start tomorrow. Like depending on, like you said, it will hang on tomorrow, and then depending on what the market does, if I get the bounce, great. Or see like maybe it just hangs in that area a bit, right? Just like chilling, then I'll stay. But if it starts to do that little roll, I might, I'll probably get out. Not saying that I'm out, I'll keep my eyes on it because it doesn't, I think I like Walgreens, but yeah.
All right.
Thank you.
You're welcome. Okay, let's move on to XPO for Eli. XPO Logistics. Oh, okay. Yeah, a courier company, I believe. We don't look at too many of these kind of companies. I think these guys are sort of more international sort of logistics, import exports kind of stuff, I believe, more so than like a UPS or a FedEx. That level right there. ginormous gap. What was, that's weird. I wonder what the reason for this gap was. Massive gap down, like between earnings, and that's weird. But okay, so this has been basing. It's been going sideways now for many months. Bit of a double bottom here. We've got, the higher low off of that, the move up, and now we're coming into resistance and pulling back, which shouldn't be a surprise. I think the important thing to watch out for here is how far does it pull back from here? Does it just consolidate here, go totally sideways without pulling back, maybe down to this resistance? That'd be pretty awesome, because if it does that, and the longer it does that, the better chance I think that it's got to break out to the upside of this. If you pull back down to here and then bounce, really you're just sort of confirming this range and that it needs to spend more time in that range. If you pull back to here and break down below it, and also notice all these moving averages right here. So this line, what is this, 51-ish, 50 to 51, say. Lots of moving averages there, really should act as support. So a break below there obviously is bad, and it's probably going to come and test these lows again. But yeah, ideal situation is it consolidates up in here before it move higher, because any break out of here should fairly easily get through this 200-day moving average. So I would say what you want to see here, if you're looking to get in this, is a few more days for consolidation up in here, nice and tight, and the tighter the better, then a breakout. And you could buy that breakout then, not investment advice, by the way, with a stop below the consolidation. Hopefully that's helpful, Eli. Okay, and if you have any more questions, go ahead and feel free to type them in the chat and we'll come back to it. But we are going to move on because we've got lots more tickets to go. Oh, I see we've got more for you as well. That's totally cool. So WM, GNRC, and XPO looking to enter long-term play. Yeah, okay, cool. So I just saw that other note from you. I think I explained, I mean, this is how you could enter this on a long-term play. And enter with something that's probably going to start you with a winner, right away, and then stay as a winner kind of thing, which makes it a lot easier to stay in them. All right, so we'll get to some of these others in a sec, but first we're going to look at Playboy for Ken. Wow, what a dog this has been. Brutal. I used to really like this company. They should have been, and I think, I mean, looking at this chart, and obviously management has not been able to execute, and they really should have been able to, I mean, they've, and they had earnings today. We'll look at the intraday chart so we can see what happened after hours. But, I mean, this is obviously a great brand, a brand that's been around forever. I mean, everybody has heard of this brand. All they have to do is tighten up their royalty business. I actually, way back when it was going to de-SPAC in here, did a lot of research on it. And in doing my research, it started to run up in here and I didn't buy it. And then, I mean, it went crazy, right? It would have been beautiful, but I just thought it was moving too much too soon. But anyway, in all of my research, it was sort of like, previous management had done a really poor job with royalties, and it seemed like they just had to renegotiate some contracts or sell contracts to new vendors as the old ones expired, because they could have been getting a lot more money. They're basically giving away the brand. And I thought that was what was going to happen when this new management came in. And obviously that isn't working. So we can see we're just in a massive downtrend. There's no sign of this downtrend easing up. No sign of it slowing. And we've had little hints at bottoming action. We've broken down below it, right? You can see in here, look at, over here, this wasn't too bad. And, then we get gap down, and then we had this, another consolidation, and it broke down to the downside, right? And we're rolling over again into new lows. And after hours today, okay, not so bad. It bounced a little bit, so we came down as low as 262. Now this, this doesn't trade. We can't put a lot of weight into this because this doesn't trade much after hours. But anyway, I mean, we came down as low as 262 and we bounced up and we're now in the area of $3. Okay. It's good that it recovered a lot of that. That's a half decent recovery. So I guess we've got to wait and see what happens tomorrow. What does the market do with this? Given this bounce, I think that, you've got a decent chance. If we look at Plug, for instance, Plug had earnings yesterday after hours. Let me get to see the, oh, shoot. Hang on, I'm going to put a different, you know what? I'm just gonna. No, I don't want to have a template. I'm just gonna make this dynamic. Yeah, we'll just do that. This takes a little longer to load when I do that. Okay. All right, you can see the Plug. Kind of the same thing. Went down initially, popped up, came down, back down in the after hours. But today and into the pre-market, it started coming back up. And that what I saw there in Playboy after hours action kind of reminded me a bit of this. I was watching Plug because I had a position in it. And you can see in the pre-market started to come up quite nicely. Had a bit of a blow off top though, and which is where I got out. So yeah, pretty happy with the way that worked out for me. But you can see that it came down on an ugly day like today. It came down and consolidated sort of in the same kind of area as it was playing around in the and above really where it was playing around in the after hours. So can we expect the same sort of thing out of Playboy? Is this, could it capitulate here and start moving up finally? I don't know. I mean, anybody who's in this now, why would they get out now, right? If there's any bag holders, there's no reason to get out. You've already lost so much money in this. You're going to be selling this for pennies on the dollar, right? The problem is, who's going to buy it here, though? It's giving you no reason to buy either. So I think, where are we right now? 3. Yeah, but I'm also, it'll take a while to get back to 12. Yes, for sure. There's no doubt about that. It may even take new management. It may take a shakeup. There should be a shakeup in this company. Somebody's, I think they've had enough time. How long has current management been in here, right? Somewhere, I think they went in around here. I think it wasn't here. So they've had, at least a year and a half to get it together. That seems like enough time to me. It seems like it's time for a shakeup there. So maybe that's what this is going to need to start a recovery. Maybe somebody, top level executives have got to go and get somebody new and get some fresh blood in there. Maybe that will also help the stock price. And you've got to think that there are shareholders clamoring for that now. I would pay attention to that. See if there's any shareholders starting to make noise. So how long does it take? I don't know. It's impossible to say, but eventually somewhere is low enough. What is this company worth now? 142 million. That's it. It's nothing. Yeah, it's got to be near a bottom, but technically, I don't know. I think that you really got to dig into the fundamentals and find out where that bottom is. But they had a massive loss today too, didn't they? Wasn't it huge? What were they expecting? Losing 15 cents? Okay. Anyway, yeah, sorry, I don't have better news for you on that one. Okay, let's keep going. All right, for back to Eli with WM, Waste Management. Yeah, garbage. I mean, garbage has got to be a good, safe company to get into, right? We are awesome at creating garbage. So, getting rid of that garbage, recycling our garbage, got to be a good business to be in. So, this has been a nice uptrend. This has suffered a little bit, but not that much. Certainly not as much as any of the tech stocks. Value has been working. And the question is, does value continue to work? Is this the time to get into value? I'm just going to assume this is a value stock, right? I haven't looked at any of the fundamentals on this, obviously. So, you can clearly see the uptrend here. Shorter term, though, we've been getting choppy. Reminds me a little bit of Costco. But, still trending up, still making higher highs. In the very short term, I mean, the market has been a little rough since, we had that, the post-June low rally. This has got to start moving up. If you're looking to get in here, I mean, there could definitely be worse places to get in. Do you want to wait until it comes down? Is it going to come back down to the trend line anytime soon? Or do you want to try and get in up in here somewhere? This is all kind of messy for my liking, but this is kind of the way this stock works, right? This is up and down a lot. So yeah, I mean, if you're in a hurry to get in this, you could get in above some of these highs here. You could draw a little line, kind of, I don't know, maybe here or something. 162-ish. That's maybe a place to get in. Maybe right there. That'd be a place to get in. Or you could see if this pulls back tomorrow. I wouldn't be surprised then if it comes down to here. You could also put a line, connect the dots. Oops. Connect the dots on that. Because that could be a secondary area where it might bounce, before it gets to here. I see Eli saying, yeah, waste management is definitely something to balance out the risk in the long term. Absolutely, definitely. Probably pays a half decent dividend too, right? 65 cents. What would that be on the 156? Yeah, it's probably what, 2% or something dividend. Better than nothing. Garbage will never get less. It's safe to assume. Certainly, yeah. And this is a company I've considered myself a number of times. And yeah, I wish I had taken a little risk out of my portfolio and put it into this. Because certainly would have helped. Through this rough time. Yeah, exactly. This is a hard one to find an entry in. I mean, I can look. There's a couple places, right? Like back here. It's a long time ago, but it's the kind of thing you want to see if you want to get in a stock like this. That right there. That's a no-brainer entry right here, right? You see that? But where do you see a nice pattern like that again on this chart since then? Maybe up in here is kind of, something like that. But since then, I really don't see decent consolidations, at least that have broken to the upside and given you a decent entry. They all get a little more difficult from there on. And, and I think that this what's happening right now could be a decent entry. Certainly not as nice as this one. Yeah, okay. What's the other? GNRC. Is that Generac? It is. Ooh, yikes. All right. Wow. What happened to them? Is hurricane season's over, pretty much over now, right? Or ending?
It's getting close.
Okay. because this is a company, this is a great company to get into, or usually a great company to get into before hurricane season. And you know, when you get a big hurricane coming, like when was Ian?
About a month ago.
Yeah. So
I mean, you also have Nicole, I believe. It'll be a category 1, I think, in a couple of days. It's about to hit Florida, if not tomorrow, I believe.
yeah, if Ian was only a month ago, wow, it didn't get much out of that. Quite often you'll see a nice bounce like this. You know, if a big hurricane starts coming, you know, all of a sudden you'll get a nice little push, and it can make for a nice little swing trade. Anyway, okay, so why is this pulled back so much? This is exactly Eli. Eli says, you know, GNRC is this pretty solid company, and I agree with you. But I wonder why it's pulled back so much. I mean, look at this. This is like from $520, and we're now at 100. What the hell? I don't know. I think you know, the TA does not answer that question. The TA is like, you know, this is not a tech company. This is an industrial. Why is it down 82%? I don't know. You got to go answer that question. And I think you need, you know, you got to look at the fundamentals. You've got to read through some reports. I think that's really important to do, you know, before getting into this on any technicals, because like I said, technicals are telling us that there is something seriously wrong here. Technicals are also telling us that this could be a decent spot. There's good support right here. So I will go through the technicals a little bit, with the caveat that you've got some more serious research to do here. Yeah, some should be some good support areas right in here. And then you get down here, you start kind of almost looking like, you know, like breakdown in Tesla kind of thing. All right. Yeah, that, I think this like 60 area is kind of like, yeah, it's going to be major support actually. Okay. I'd be absolutely shocked if it broke down through 60. But, you know, 60 is a long way from 100, right? Or, you know, from 95, where we are right now. But it's nice to see it's consolidating there. So if you've done research and you think, okay, yeah, this company has some problems, they fixed whatever their problem was. I mean, I can see an earnings issue here on this one. Something happened back there. And it looks like, you know, earnings have come back up again. So, or sorry, earnings are estimated to come back up again. The COO resigned back in October. Interesting. Okay. After this nasty problem with earnings, find out what happened in their last earnings. Go read their last earnings report, because something obviously happened in this quarter. Because they've been rocking, right? You can see, you know, earnings were pretty. They had a problem in this quarter as well. Yeah, that's a big jump down. Is that a wow? Eli says they did a valuation on fundamentals, and it should be, you know, 160 to 180. So okay, cool. So, you know, yeah, I mean, I don't blame you for wanting to look for an entry. And while, you know, I mean, this is a nice consolidation and everything, there's just some ugly above, right? You've got a lot of overhead here. There's just so much up in here that makes it difficult for this to go back up again. This is going to be some pretty heavy resistance, and look where that 21-day moving average is as well. So how much extra do you want to pay for confirmation that this is on its way back up? How much risk do you want to take to the downside, right? Because if you were to buy this consolidation, let's say, actually, here's another little spot right here, because that, yeah, okay, let's get that in. This is actually probably a pretty decent level. So this 106 could be a decent level for an entry. So say you play a breakout from that. Where do you put your stop? Well, I guess you put your stop just below, but if you're an investor, your stop has to be kind of lower than that. Do you go 75? Do you go 60? I don't know. That's the decision you have to make, and you know, you've got to decide. You've got to take a position size where you can afford to risk that much. Yeah, I mean, if you're dying to get in this thing right now, I think your best entry is a breakout above 106. But watch out what happens when you get up into this 124 area. You know, all this, you know, that gap and everything right there. You might want to take a little bit of profit off if we get there. Okay, yes, we will. Shills, we'll definitely look at Disney. Yeah, I'll move on from this. I know we've had a lot today. Let's see. Oh yeah, Marianne has also asked for, Marianne's still here, cool. Sorry it's taking so long, Marianne, to get to these. Oh, you've got a whole pile of them here. All right, we're gonna have to blast through these. Yeah, we'll look at Disney for Marianne. We'll also look at Disney for Shills and Starbucks. One last thing here. Eli says, from TA, just looking for consolidation on support and not a bear trap. Yeah, I mean, this is consolidation on support. And maybe this is the kind of thing where, again, you got to find out what happened here. What happened in this quarter? Is it something they can fix right away? Or is it going to take them longer? So is it going to take 2, 3, 4 quarters for them to fix? If that's the case, this goes sideways for, you know, up to a year, right? If it was kind of a one-time thing and it's fixed, then yeah, you know, maybe this can spend, you know, this will start to climb out of here reasonably quickly. But it kind of looks to me like, you know, it's got some sideways action for a while. But this could end up being, if this doesn't break down, I mean, this could end up being a really nice entry here in this area, especially if, like you said, you know, evaluation of 160 to 180 is perfectly reasonable. Okay, let's move on to Disney. Another one that has problems. That is definitely gonna. Now, I have unfortunately a position in Disney. I'm not thrilled about it. I love the company. I am shocked that it is way down here. Let's go. We got to look at, you know, some long-term stuff here. You know, look at these levels. You know, if you forget about the COVID, we're at levels we haven't seen since 2016, 2014. Brutal. I wanted to get, that's the level I want. I want that level too. And there's a level here. Cool. All right. That's, I think, all the levels we need. So, you know, Disney, again, this is one where you got to kind of go read the transcript of the call, or read their you know, read their earnings report. I think that you will find that they right now are in a place where they don't care about shareholder value in the shorter term. They are looking ahead. They're looking years ahead. And they are spending the money they need to spend to regroup. They're not worried about so much about expenses right now. They're not worried about the shareholders, like I said. They realize they have some problems and they're going to fix them. And I believe that they will. You know, this is a good enough company that they are going to fix their problems. But in this earnings report, it became clear that it's going to be a while. So I don't think there's any rush to be getting into this. I don't think anybody should be catching a falling knife in this. I think that it's perfectly reasonable for us to expect that we're going to consolidate between 85 and 100 for probably a couple of quarters. It's going to take a while before we get out of this. But do we go much lower? I really doubt it. You know, isn't this a better company now than it was in 2014? I kind of think it is. You know, so And if we go down to 75, then where are we looking at? We're, yeah, that's 2014 was all this here. Okay. Yeah, I maybe there's another $10 of downside in this, but anything beyond that, I would be absolutely shocked. Okay, so that's Disney. Disney, Apple, Baba, JD. Apple, another one that's just like, what is going on with this thing? Okay. Apple coming down into this. That's the CPI low right there. So far it's holding. Doesn't look like it's going to hold though, does it? It looks like it's got to come down and test this June low. That better hold. If we don't, I mean, we've got, I guess there is some support. We'll get those lines in too. Starting to look into sort of the bottom of some of these consolidation zones here, but especially I think the important one comes for right about here, right in this area from 100 to 110, basically. That's an area it's got to support, but I think actually the sort of 110-ish is probably what we're going to call major support, and that kind of needs to be a line in the sand. It might be interesting to see what Buffett has said, because I wonder if Buffett said anything about Apple in Berkshire's earnings in their call or anything. That might be a little cool little research project to find out what he had to say about Apple, if he's at all concerned about this pullback. I don't know if he'd even say anything. Actually, to him, this isn't even a pullback. This is a nothing, right? This is sort of the stuff that, he doesn't even blink an eye at this sort of thing. I bet he'd start to kind of, wonder a little bit if it came down into this 108 area. I think that we're going to need, obviously, Apple has had some issues with everything that's going on in China and their factory there and all of that. Has some issues. That sort of stuff's going to get resolved. I mentioned, with some of the industrial metals earlier about how with the zero COVID thing in China, and if the rumors become true that they're just going to do away with the zero COVID, that would do wonders for Apple as well, I think. All right, let's see. Let's go back to one for shills with Starbucks, and then I'll come back to Marion's.
Thank you.
Oops. Oh man, I can't even type tickers properly now. I am starting to run out of steam here. All right. So, okay, we have a nice little consolidation. We kind of tried to do that same consolidation area there. So let's get these lines drawn in. Because these lines, oops, actually, you know what? That is a major support. And this one here is kind of a major support too. Yeah, there. Okay. And then that one down there. All right. And then we got a little minor area up here. And then that's going to be a major, that one. So I wonder if Starbucks has started building new stores yet, because I know that during COVID, and then, so I live downtown in Vancouver. I live right in the middle of the city. And I would say probably half of the Starbucks locations within a 10 or 15 minute walk of me. And so we're talking like, there were probably, if I walked 15 minutes any direction, I could probably, get to 20 different Starbucks. And I'd say at least half of those closed, in the last, during COVID. And I haven't seen any new Starbucks. So sure, that's probably saved them a bunch of money, but it's got to have cost them some revenue too. And Starbucks is a company that kind of loves to build new stores, right? So I wonder if they are rebuilding new stores. But this looks like, this is nice. This is really nice basing action here, right? You've heard me talk about base on base. It's pretty clear on this chart. We've had we've got the base on base. So you've got this nice base here, right? You've got this double, triple bottom down here. You come out of this base, you try and get out, you come back, you test, you hit a moving average, you go back up. And now you're really cleanly in this next base. You know, the base is a little bit wide for my liking. You know, what are we, 83, $10 wide? Yeah, 10% wide. It's not so bad, but it's clean. You know, it's clean off the 83 and it's clean off the 93.50. And we are making a tight consolidation here right after earnings. And I see we've got earnings out of the way. We've got the dividend payment out of the way today. I think this thing's going to go. And if we get a decent CPI print tomorrow, I think it's going tomorrow. I think if you want to get in this, Shills, you got to get ready to get in this tomorrow, because this is a nice setup. Now, that being said, look what happened back here, right? We had this very similar setup, you know, without the gap, but similar setup, and it failed to the downside. But it didn't fake out at all, right? So that's cool. Yeah, I think there's something to this. So when you break out of that little base right there, and again, not investment advice, but if you're looking at this thing, how do you not buy that breakout? You know, and with a stop somewhere below this consolidation, nicely risk defined, could make a big move. It's almost a no-brainer to 99. Okay, you know, this resistance area here. If I were swing trading this, I would definitely be taking some off. You know, a good chunk of the position by 99, for sure. If I were an investor, I still might take a little piece off at 99. You know, if you get through 99, it looks like a clean run to 110 as well. So yeah, nice find there, Shills. I think this could be good. Definitely, if you're trying to decide between Starbucks and Disney, it's Starbucks. All right. Okay, back to Marion for.
I have a quick question with the Starbucks. If you want to play with a swing trade, on either side, should it wait for a confirmation tomorrow direction? If it's above the 191, somewhere 193, you will do a swing to 99, right? And then if it's confirming going down, then you do a swing to 84, right?
Yes.
Okay, cool.
Yeah, so I would, you know, I mean, I'm definitely inclined to the upside on this one. Look at, I mean, this showed relative strength today. So today it's down 0.64%. S&P 500 is down just over 2%. So we've got some relative strength there. Like I said, you know, tight consolidation. Was it dividend today? And also, so you got to add the dividend back in when you're looking at this chart, right? Because my charts are dividend adjusted. So if you look at this chart, a 53-cent dividend came out of this today. So the reality is that it should be at 92. So it should be even higher in this consolidation today, okay? If, you know, you add the dividend back in. So it's strong. So I don't even know if I play it to the downside, but there is still a decent move here, right? You could get it from 90, you know, 90.50 or whatever. If that was an entry, you could take it all the way to, like you said, to 84. That's not a bad move, and because it'd probably get there fairly quickly. But I think that the probabilities suggest this goes to the upside. Yeah, hopefully that makes sense.
Yeah, it does. I'm only just concerned about that big gap down there. So it looks like
Yes.
some sellers. I'm sorry. Yeah. So.
Yeah, that's why I think if it does go down, it's probably fast. You know, it could do the 84 in a day, maybe two. You know, but again, I don't think that's the direction this is going to go. All right, so did we do? Yeah, we did Apple, Baba. This will no doubt be bad news, right? Stock that just can never get going. You know, it gets good news and then it never follows through on it. All right, so okay. Okay, after that big, earnings, yeah, earnings gap down, Dragonfly Doji, nice reversal candle on that earnings, right? After the horrible gap down. And kind of been grinding up since then, but again, pulling back, right?
So messy, like I don't know how to swing trade this or do anything with it.
Don't, you know what? Then don't.
But I have the money that I'm losing, so I'm trying to hedge it by.
Right.
But I bought it all the way up in 140-ish, I think, and I didn't get out. And
Right.
like,
So okay, can I make a suggestion? All right, and you know, don't take this the wrong way, but like it sounds almost like you're trying to get revenge on this.
oh, totally, absolutely.
Okay. So, well, at least you know. And so also, I'm sure you know that can never be a good thing, right?
Yeah.
That just, you know, that just gets emotional, and we don't make good decisions when we're trying to get revenge on something.
So just basically leave it and don't look at it.
Yeah, I would say don't look at it. You either just bail out of it, or you just kind of don't look at it. But don't be going here to try and make money, right? This is something that's probably not going to give you a lot of money for a while. You can find better opportunities. Like we've looked at a lot of actually, you know, some people have come up with some really good opportunities today. You know, this is a session I'm probably going to review myself and take a look at some of these charts that we looked at earlier, because we've seen some decent setups. You know, and Starbucks is one of them, right? I think Starbucks is an easier place to make money than BABA. Okay, so let's take a look at you know, because what do you play here? Do you play the move up on this channel? And where do you go? You maybe get 65, but then you start playing this swing trade, right? And then something happens in China and this thing drops 20 bucks. You know, that's the problem with BABA and trying to swing trade it. Any of these Chinese stocks, right? You know, because I see a couple here. Well, you know, there's another one, JD. There's just so much risk coming out of China right now. You know, I won't swing trade these things, no matter how good the setup looks. Well, let's take a look at JD.
Oh, yeah, I was also trying to see if I could just average down, or yeah, just to bring my costs down a bit and increase my position in it.
I understand, and I think that we need to see. I don't even. I wouldn't even want to recommend averaging down, you know, in these things. We need to see some structural change in China, and that doesn't look like it's coming anytime soon. You know, if anything, it almost looks like things are going to get worse in China, not better. Or at least that's my opinion, right? And so until we see that things are maybe going to change, the policies are going to change, the zero COVID thing is going to change, and that the hate that Xi seems to have for tech companies in China, that goes away. These things are hands off to me. But I do hold BABA, and I'm just going to hang on until, and I might have to hang on to that for 5 years before, you know, it gets to a place where I'm happy to, you know, take some profits on it, because there's no profits in it right now for me.
If you think that, okay, so the same goal here would be get long-term hold 5, you know, pass it on to, you know, future generations, something.
Yeah.
How do you feel that, okay, hold on for a bit, but what level should we maybe add on to it to, you know, position ourselves, or should it come up, then we have at least leaving something?
Right. I think that, I think that's more.
Because for this, I was looking at
that's more a geopolitical thing than a technical thing. Do you know what I mean? It's because I really think that we need to see change in China. I think we will. I think that like, there will be a resurgence in China. There'll be a resurgence in Chinese stocks, and I want to have the reason I'm keeping Bob is so I have a taste, so I have a reason to pay attention to China. But I'm not ready to buy anything else there yet. And I'm not sure what I'm going to be. I don't think it's going to be a technical level that tells me when to get in. It's going to be maybe a coup. Maybe
strong words. Strong words.
I know. I better be careful. They might
exactly.
be. But you know what I mean, right? It's.
I was very tempted to get in when it got almost to the 30, that long wait over here. But I was hoping that it would like either go sideways over there, then I can get in at a good price, but or something like my delta would make sense. But no, I jumped right back up.
Like in JD, technically you could say, okay, above 50, and if it's holding above 50, you kind of want to see it hold above 50 for a while, right? Like,
yeah.
Like, I think that, okay, I guess to answer this question, from a technical standpoint, this needs to base in here for a bit before I'm confident to then buy it above there, or maybe buy the bottom of the base. But, because if you look, really what I'm doing is I'm kind of extending a previous consolidation, right? And what's happened is that this basically fell out of that consolidation. So now it's like, okay, once it falls out of that consolidation, all bets are off. So we got to go back in there and we got to hold it. So to me, or the other thing that could happen is maybe this turns into a consolidation down here.
That's what I'm thinking it's going to do.
But that's got to go on for a number of months before it gives you the confidence to then, go, okay, that's a base, that's a bottom, I can buy a breakout from that. And I don't think any of this happens anytime soon.
Okay, but I mean it, so I'll keep it under my, I'll keep watching it. I took my eyes off it for a minute, but I will. And then if I see like a double, I probably would try and get in at the 35-ish and ride it up to 45 and then see if it will give me. Yeah.
If it came back into this 35 area, or I guess actually more accurately, it's going to be 36 or 37, like this area. If it came back down there and then started to move up, I could see you buying that. Don't buy it just because it gets here, because it could just easily break below this. This is really minor support right now. Okay. You want to see it move up from there, buy it on the way up. Don't be afraid to overpay by a couple of bucks, right? Pay the extra couple of dollars for the confirmation.
Okay.
That makes sense?
Yeah. I wanted to see if I could, instead of just buy the stock straight up, I would do like I think I've spoken to you about this before, and you said it's not a great idea, but to do like to sell the puts for the 30, because I want to buy it there and there anyway. Right. So let's say 35. So when it comes down to the 36, buy the put. Then if it drops down, I wanted to pay that price anyway, right?
Yeah.
Then,
yeah.
But so my question was that if 30. It should drop below that 35, then what would be the next down, so that at least I know. Does that make sense?
Yeah, 30, 31-ish. So 30 is a good strike to sell, because you should have some support here at around 31. Okay. You're not going to get much for those. Like selling a 30 now, probably.
No, would not work.
That's. But now is you want to be selling that. It's actually, this level is 32, and then obviously there's going to be some support at 30. Okay.
So I was thinking if it moves down to 35 or 36, like we thought in that channel, then I will do a sell for the 30. 30 something.
See, when you want to sell those puts in a perfect world, when this comes up here and starts to roll over, you know, if it came up here again and started to roll over, that's when you want to sell those 30 puts. But then, you know, they're probably only worth pennies, you know, when it's way up here. The mistake I see people make when they sell puts is they wait for this to come down here and they think it's going to bounce there and they sell their puts here and then they can get a better price for them too, right? But it just keeps on going and then they get assigned. And that's, you know, and that's unfortunate.
That has happened.
Rather see what's when it's up here rather than down here.
Yeah. That's why I wanted to get that second opinion and be like, okay, what would be the next low after 30? So you are thinking the 20, the 31, 29-ish, that area. Okay, cool.
Yeah,
Right.
32 to 30 is a really good support level.
Okay. So then we have LC is also pretty much not the greatest going on right there.
Yeah, okay. But you know what? I mean, when this broke down on earnings, it came down and you can see the support level that we've drawn in before that it's holding. So that's something, but it's kind of a bit of a bear flag. Let's take a look back. Let's see where we go. Oh yeah, okay. COVID. This one took a while to recover from COVID. Interesting. Yeah, so this area is at pretty decent support, and then you know you come down in around $8 is your next support level down. Let's get rid of this downtrend line. It's messing things up. Yeah, all right. Yeah, this one again, you know, we are into an area where it should have pretty strong support, but this is a bear flag. And you know, that's not good. We expect to see, this is a nice looking bear flag actually.
Yeah, this one I think I'm contemplating whether to short it, like do like a 6-month short or something, because I feel like when it breaks the 8, the next is like the next is around the 5 or something, and it feels
50 or thereabouts. What was it? 9? Yeah. Yeah, it's in around 750. So the target on this bear flag is around 750.
and then go sideways a bit again and then go down. I just feel like this is just
yeah. I think that I suspect though it's not, it wouldn't get all the way there. I think this line, this 818 area is going to hold. Okay. Because that was pretty decent before. We're at 750 here, there. Yeah, there's no reason for it to hold at 750. There is reason for it to hold at 818.
Yeah, that's why I felt like when
okay. So yeah, if you do end up shorting a breakdown of this, get ready to take it off as you come into this 818 area here.
Okay.
But again, you know, we're kind of seeing a lot of this, right? Where we have a base, we're trying to form a base, we break down, we come down a ways, and we've seen some of them kind of recover back up. You know, we've seen like, you know, I guess it was JD, it got like sort of halfway recovered, right? And we might see the same thing happen here in LC. And the same thing's got to happen, right? Either it makes a base in here, or we come back up into the old base and move up from there, or go sideways more. Before we can move up from there. Yeah, we're seeing sort of a lot of similar stuff. So you can look at some of these other stocks. So this one is, some of these other stocks are sort of more mature in the spacing pattern for clues to what might happen next in LC.
I feel like it would, like if you look at the between June and August, I was having the feeling I might repeat that again. See if you look at those candles and then roll over.
Right.
because like the overall trend on this is like,
Yeah,
Yeah.
but don't necessarily look back to what happened in June or August in this one, right? Look what's happening with other stocks, like some of the, what's a good example of
like
one that put a base in? Was it? No, it wasn't. Oh, XPO maybe. Yeah, okay. See, look at the bottoming pattern on this. Look at this, how like this had been basing, right? And then it broke down out of the base, but it fairly recovered quickly. It based again, and now it's back up into this bigger base, right? This is what I'm getting at. We're seeing a lot of this kind of action. So LC, look at LC kind of looks like this right here right now, doesn't it? We'll go back to the LC chart right now.
I don't know. I feel like we should maybe compare it with another financial stock.
I'm just trying to get you to picture this price action, what this price action is looking at right now, okay? And see how you've got bases. You got a base, it broke down out of it. You got another base, it broke down out of it. And XPO did the same thing. Back in here. There, okay? Where you had a base, you tried to go up. It's a little bit different, but you had a base, it broke down, and then that base, after a spike down, it finally recovered. It turned into another base, and it started moving back up. So you get this base on base on base kind of thing. You could draw all these kind of rectangles on this, and you can do the same thing with LC. And I think that LC is probably going to do a similar sort of thing that this is doing. And now we're going to, probably see this. Either this is going to break out of here soon, or it's going to continue to go sideways in this. And that's the same sort of thing that I'm expecting. From what I'm seeing in LC, that's the same sort of thing I would expect. But we shouldn't deny the fact that there is this bear flag, and it could very well break down out of there, and we can certainly prepare for that to happen. But we should also be prepared for the flip side of that, that it actually breaks out to the upside of this and gets itself back into that previous base. Because there's always this sort of, there's two sides to every trade, right? There are people who see this as a bear flag and it's going to go down. And there are people who see this as it's going to bounce from here. This, forget about this bear flag. It's going to break out to the upside of this. It's going to be a failed bear flag, and it's going to go up nicely. Okay.
Thank you. I think that's it for me.
Yeah, you asked for Amazon too.
Oh yeah.
We can look at that real quick. Yes.
I am in Amazon. I got it 110 or something.
Yeah.
No, 1.5 when it hit that. And
Yeah.
then thinking that was gonna go up, and then it just kept down. And
Yeah, again, I mean, you can see this here, right? You can see all these bases. I can draw, if you want, I can draw the rectangles around them. But, there's a base. It tried to break out of that. When it failed, put in a really nice base here. But then that failed, and that is now continuing to fail, right? It tried to, on this big gap down on earnings, it came down below this level, came down below the low of that base and went right back up. That was really hopeful when it did that.
that's when I entered.
It's really important that it do that. But unfortunately, it couldn't get, it just barely got back into that gap, and it was finding resistance right at that gap, and then it just totally rolled over. And even look at what happened today. We were trying to consolidate in here, and then it just totally failed. Now we're down to this 85.38 level. I'm not sure how far. This has got to go years back, right? Oh, so this is still a post-COVID. There's COVID right there. Okay. So yeah, we are back into pre-COVID levels, but this is a strong support level pre-COVID. And it was almost supportive during COVID, right? So we should actually make that line a major support level. but we, should be prepared that that might fail as well. So we've got some sort of minor support coming off of this. But yeah, I mean, if this, that one right there, 73-ish. If this 85 level fails, 73 is kind of a no-brainer, and then it's looking like 60, right? Yeah, I mean, it could just get so ugly. This is almost this. I mean, looking at this chart almost reminds me of, back in 2000 with this thing. This. When it failed in 2000 and lost. How much did it lose? I think, what was it, like 90% or something, or 80, 95%? I think it lost here. Yeah, 95. Yeah, we don't, obviously, we do not want to see that happen again. But notice how on the way down, these things can just crash through all sorts of support levels and keep going down, right? It's a totally different environment on the way down than when it was on the way up and when it created those levels.
Yeah, I don't think it will fall that much because it's a different.
No, and I'm not suggesting that either. But I just want us to be aware that this stock has done that before. How far are we off the? The high was here. Okay. How far are we off that high right now? God, it seems that 54%. That just seems unbelievable to me.
I take my words back then because 53 and 95 isn't that far off.
No, it's more than halfway to 95 now. Right?
Oh boy. Okay.
Yeah, I know. That's very. I mean, just for fun. Although it's not really fun to do this, but just for fun, where would a 95%? Whoops. Where would a 95% drop take us? Let's see where that level is. Oops. It was here, right? Okay, that's 85. Oops. Okay, 95 takes us to around $9.
Yeah, I don't think we will get that far, but we might get.
So $9. So it hasn't seen $9 since 2012. Yeah, no, it's not going down 95%.
There's a lot of support going down, so yeah, but to play this, at least to try and hedge or try to do some swings or something.
Again, why? When we've got nice opportunities, when we've got stocks showing strength, right, not weakness, if we want to swing trade, unless you want to swing to the downside, if it breaks 85, I could definitely see shorting that. But I think it's easier to make money on the upside. Why not play something that has relative strength to the market? Something like, some of these solars that we've been watching. Look at First Solar. You want to swing trade, when this broke down out of here, out of this consolidation, and then it came back up in it, once it got back up in here, it gave you a little tiny consolidation there, and then boom, there's a nice move. You went from 135 up to 160 in about a week. Play that. Go where there's strength. Don't try to be like scraping things out of things that are weak. End phase is another one. I guess end phase has kind of been a little weak. Oh.
That First Solar though it's in all-time highs, and I cannot. Okay, so what you're saying is wait for a pullback and then get in. Okay.
Wait for a pullback, then and wait for a setup, right? like here, see this here? I highlighted this setup for everybody. Said, look at this. So you got this head and shoulders. It came down. It almost hit the target. Now you're consolidating. Play the breakout of that consolidation. Boom. If you had played that, even if you chased it and bought this gap, you're in at 259. And okay, say if you're conservative, trying to stay in it, it pulls back. You got it for 300, $40 there, right? That's not bad, you know. So, and that is from finding stocks that are showing strength. Now you got to be really careful if you're buying like the breakout of here. You got to be careful about that. But every single stock that's in an uptrend, okay, look at this. When this was in this uptrend, it's making new highs the whole time. Stocks and uptrends make new all-time highs. Stocks and uptrends are constantly breaking out. I understand the reluctance to be buying stocks that are, at all-time highs, especially lately.
Yeah, with the whole market in the downtrend, it's like we are going against the momentum, right? So
exactly. When I'm looking for breakout trades to the upside, I'm looking for stocks that are strong, that are showing me strength, or something that has clearly put in a bottoming pattern, and then is starting a new uptrend. Do you know about the whole, phases of the market?
I've heard of it. That you mean the summer, the autumn, all that?
No. Like stage 1, stage 2, stage 3. It's kind of, this isn't a good example. You know what? That's something actually I don't want to get into that right now. We need to start closing this down. We've been at this for 2 hours now. But that's it.
Marvin says the money flow was that.
Sorry?
Marvin says the money flow.
That's what Kevin was kind of referring to. Stage 1, stage 2, stage 3. Well, that's what Joe there's another guy, I guess, on Instagram. He calls it like the money flow, where it's like stage 1, and then stocks go to stage 2. Then from there they could go stage 3. It could, and then from there typically pull back, set up for another stage 1, go back to stage 2. And then it's they always go up. Either go sideways, up, down, sideways, up, down. That's yeah.
Oh, okay.
I was trying to find a chart for.
Yeah, it's actually it's more commonly referred to as stage analysis.
Yeah, the 4 stages. Yeah, price movement. Yeah.
Let me let me just really quick. I'll show you, and maybe Google it. But here, let me bring this in. All right, so here you got the stage 1. See how you've got it's going sideways down at the bottom. This is where super smart money, is getting in, and then it starts to break out. And up in here is where and the farther up you get in stage 2, the dumber the money is getting that gets in here, right? So there's nothing wrong with buying these once it starts to show some strength here, especially after this pullback. To me, the ideal place to get in something, after it is based, is it goes up, it pulls back. Once we get above this swing high here, that's where you want to get in. And then hopefully you're in here for this whole stage 2. And then you get this stage 3. And this is where the smart money is getting out. It's called distribution. Okay? So they're distributing it to dumb retail money. And then you have stage 4, which is the decline. And then that leads us into stage 1 again. So we have seen stage 4 in a lot of stocks, right? We are in stage 4 now, and I would argue in a lot of stocks, these ones, this is why I keep talking about basing, we are now in stage 1, and we've got to be ready, we got to be prepared, and we've got to be able to recognize when we start moving into stage 2. I see Marvin also put a link in the chat. Yeah, this is an even nicer picture. Thanks, Marvin. Right, so again,
you also mind sharing yours because it has notes and then
notes. Yeah, okay. So if you Google that, what site is that on? Nextbigtrade.com. And yeah, it's got some notes. If you just Google stage analysis, you'll come up with a bunch of different websites to look at. I just like the picture on this one. And see here, so so you've got stage one, accumulation, best time for buying in here, right? And that's what I talked about. You get that, you get that first move up, you pull back. As soon as you're back above there, to me, that is the absolute best time to buy, is right here. Then you get this nice uptrend. And you can try and hang out in this sideways, right? But it confirms that it's on the way down when it breaks out this side, out the bottom of this sideways consolidation, and that's where you got to be getting out. They're not always so perfect like this, of course, but it's a pretty good representation of what's going on. And if you look at, if you zoom out on some charts, you see something very similar to this going on right now. And with us going into stage one, in my opinion, and getting close to breaking out of stage one and getting into stage two. So, I think that if you're looking to get in something, don't be buying it when it's going down, because you don't know where the bottom of this is. Buy it after it's gone sideways for a bit and starts going up. That makes sense?
Yep.
Cool.
Now to actually do it.
Well, I mean, that's, that takes discipline. You've got to discipline yourself, and yeah, exactly. Marvin says you can do it. I'm saying you can do it. Yeah. There's some smart people here. Don't be afraid to ask, questions of all the smart people in the Discord. And study this a little bit. Like, read through that webpage. To really figure out how this works, and really zone in on what is this best time to buy here, because this is the sort of price action we're starting to see lately, I think. And so this is what we got to key in on here. All right, I can't do anymore. I have run out of steam, so let's start shutting this down. I think we got through everybody's tickers. Okay, so what do we got coming up? Next Wednesday, I've got some work to do. Next Wednesday, we're going to be doing an educational session. We're going to be looking at Bollinger Bands and Fibonacci retracements. If there's been a lot going on in the market, maybe we'll do a super quick look at the markets, at the beginning of that. But it won't be a regular ticker talk next Wednesday. It'll be definitely more educational. Yeah, thank you everybody for watching. Everybody, thanks, Marvin. Hope everybody enjoyed it. If you're watching the recording, hit that like button. And we will see you all again next week, and of course the weekend recording as well. So have a great night. Thanks for coming.
Thanks.